Hey, good morning, everyone. Brian Hoops here with Midwest Market Solutions. This is Market Insider TV and our opening commentary for Monday, November the 18th. Thanks for joining us. Hope you had a great weekend. And we're coming back to today's trade activity with some lower corn soybean markets. As you can see, we're down 1 3/4 on the corn, beans off nearly 8 cents. And this is after a higher opening in the overnight. And we had follow through from Friday's close. And then we just started to drift lower into the morning hours as weather looks very good for not only the U.S. but also for South America. We'll talk more about that in a minute. Dollar is just slightly weaker here this morning. Crude oil a little bit firmer, stock market a little firmer. Gold and silver reacting positively to the lower dollar with nice gains across the board. So we noted that corn and beans were lower, and we have wheat a little bit firmer here, 3 to almost 5 cents better in the overnight trade. Of course, overnight is a low volume session, and we normally don't put a lot of stock in its direction. We're given its direction during the day session, but should indicate a weak opening in the corn and soybeans and a little bit firmer so far in the wheat market. So weather in South America is, our 90th percent. It's the biggest component of our driving influence is what's happening with weather. And even though we started off the marking season a little dry, and it was hotter, drier than desired, we slowed down plantings. They've caught up with, we noted last week, we're actually ahead of the average pace for both corn and soybean plantings in Argentina and Brazil. Good rains forecast over the next 7 to 10 days in that country, and that will be beneficial and nearly ideal for seedings the rest of the crop and early development. Hard red wheat areas here in the U.S. have received the best rains since last spring, and there's going to be more on tap this week. That'll improve conditions even further before we go into dormancy at the end of this month and early part of December. So weather-wise, couldn't ask for hardly anything better out of South America and here in the United States. We saw NOPA crush report on Friday. The October crush came in a new all-time record high of 199.959 million bushels, slightly above estimates and well above last month's 177.3. It was sharply higher than last year's 189.8 million bushel figure. Nothing wrong with that crush number. Now, crush will start to slow down, and Meal has reflected that, anticipating the competition out of Argentina to be very strong this year with a much larger crop than a year ago. Friday, we also saw a commitment traders report, and it's bearish to corn as it shows large trading funds now long 177,000 contracts, and the commercials are net short. Funds have bought over 182,000 contracts since October 15th. That's just of corn. That's net buying. That's a lot of corn contracts to be buying in about 2 to 3 week time frame, and not a lot of gain to show for it. We've rallied maybe 10, 15 cents on 180,000 contracts, and part of that is because we've seen some farmers selling, capping that rally. But commitment traders is turning more bearish with the funds long, and problem will be what happens when those funds decide to get out of their longs and go to the short side. Things could get very ugly very, very quickly. The unknown destination that has been buying corn over the last several days, we saw a lot of private export sale announcements. Some of it's Mexico. There's been a lot of unknown destination, and it is rumored to be of European origin. It hopes, of course, it was going to end up being China, but I don't think that's the case. It's going to end up being European Union. China is not buying corn from the U.S. and really doesn't want to buy any corn from the U.S. if at all possible, and they're certainly not doing it this year. So last week we saw moderate Fed cash cattle trade in the north. That's at 185 live and about 290 dressed. So we're $1 to $3 softer live and almost $4 softer dressed basis. And in the south we're 185 live. That's $2 lower. Calls this week are steady at best, probably lower once again. Packer margins are in the red, $71. Cattle on feed report comes out Friday. It looks to be a little bit of a negative report with on feed at 101, placements at 105.3, and marketing's around 105.5. So overall, we're not going to get much help out of that report, and the cash markets are going to remain a struggle here. And I think that's going to be the case for the next several weeks, where we are going to struggle in this cattle market, and until we get into some tighter numbers, maybe after the first part of the year. So that'll be out Friday, 2 o'clock Central Time. We'll have the estimates in our newsletter once the newswires put them all together. Until then, hope you have a great day, everyone. Good luck and good trading. I'll be doing RFD TV this morning, 8:15 Central Time. Hope you have a chance to tune in for that, and we'll talk to you again soon.